Hello and good morning to all of you. Welcome, welcome, welcome. Welcome to the 10 days to Rockstar status training. My name is Star Johnson and I'm one of the national trainers here. As you guys know, we have been hosting 10 days of the Rockstar status training that started December 5th and it ran all the way through till today. So today is the very last class of this session, but don't fret, we have plenty of training available for you and I will show you how to access that training a little bit later. But in today's session, we'll learn how to increase your conversion rate, accelerate client commitment and sales cycle, increase referrals, build your network of realtor or referral partners, and just go through some different nuances of what Mortgage Coach can do for you by leveraging it. So just as a recap of everything that we covered for this week, week 2, it's here for you to read. As of today, we will discuss the annual mortgage review, total cost analysis. So here's a little screenshot of what we will be reviewing today. I will definitely show you what this looks like and give you that customer experience using the mobile device, because at the end of the day, we're mobile first. We're one of the national #1 mobile apps reported in US today. So I definitely want to give you that experience with showing you the mobile app. And also with sharing some stories. So for those of you that are out there using your Mortgage Coach mobile app, I want to know, are you connecting with your customers, whether it's in a coffee shop, at the office? How are you using your device? The very smartest phone, the smartest computer out there is your smartphone. How are you using this to leverage your business? So we will talk about that. Sounds good? I want to get started. All right, guys. Just give me 1 second so I can load up so we can get started. So before we do, just some disclaimers here. To the right of your screen, you will locate a webinar control panel. I have a great team on the line with me today. We will be filtering any questions that you have, so definitely don't hesitate to implement your questions right there in the webinar control feature. This is how we will communicate today, answer your questions, feedback, and concern. So make sure you access and use that webinar control panel located to the right of your screen. All right, so what I want to show you now is I want to show you the customer experience with using your Mortgage Coach mobile app. But for you to see the customer experience and also for you to share those devices with your customers, you have to download those apps as well. So on our website here, under our apps, under the Mortgage Coach app, if you're using an Android phone, you would definitely go to the Google Play Store to download that Mortgage Coach app. And if you have an iPhone, you would definitely go to the Apple Store. All you have to do is put in Mortgage Coach, 2 words, in the search bar, and you can search to find your particular Mortgage Coach icon and download that. So again, if you need to download those apps, all you can do is, again, go to the Google Play Store for Android and the Apple Store for iPhone. Type in 2 words here, which is Mortgage Coach, to download those particular apps on your device. So I want to give you the actual customer experience here. So I'm going to open up a blank browser here and bring over my iPhone. And what I'm going to display for you here is an actual annual mortgage review presentation giving you the customer experience. So as I show you how to create this and you send this along the way to your customers, they can actually have the same experience that you are being demonstrated today. So after they review your disclosure, they'll select I understand, and then they can see the natural features of the device here. And the summary breakdown that I want to show my customer, once I hit summary, in 1 second here, looks like my phone. Here we go. So now I want to show summary, and what I'm proposing here is the current mortgage, this current scenario here. We'll talk about it more when we start building this in the browser, but show my customer comparison of a 30-year fix versus a 25-year fix, maybe doing a refinance with me reaching out to my customer with my annual mortgage review scenario. If I go to the back button here, I can show my customer that monthly payment savings of what I can offer my customer in a breakdown. So by refinancing, maybe with a reduced interest rate, I can successfully increase my customer's cash flow by $148 for a 30-year, or increase the cash flow by $44 with a 25-year. And if I hit the back button here, I can show my customer the short-term savings in a graph format. If for some reason my customer wants to review more information behind these graphs, all they have to do is hit more info and be able to drill down behind that graph information. By hitting the back button, I can also show my customer the long-term impacts as well. And as you can see right here on the screen. So giving your customer that digital impact was showing them that they have the ability to not only, or do they have to look at disclosures, but give them that ultimate digital experience where they can review any type of scenario on their mobile phone or their tablet, also on the computer. So you can be well versed and meet your customers on their playing field. So I'm going to move my phone right out the way. And now I want to start diving deep into actually building the presentation itself. So basically, go back here. Basically, with the annual mortgage review, I'll show you the impacts of how you can implement this into your line of business. We'll talk about the benefits and how you can implement it within your normal strategies today. So I do have a question before we do begin. I have a poll here, and I want to just launch a poll to kind of see where the audience is. So let me go ahead and launch Q1. So I want to know, for those who are on the call today, are you currently setting those upfront expectations with your customers that you'll be monitoring their mortgages? Because ultimately, you are the lending professional. You are their trusted advisor. So I want to know on the call, how many of you are setting that upfront expectation? So I'm waiting for you to enter in your poll information, and it's very shocking because I'm getting half and half. So let me go ahead and close this very soon. And then the next one, I want to enter in a poll here. I want to know, for those of you on the call, are you currently adding video to each presentation that you create? So some people say yes, some people say no, some people say sometimes. Okay, so it's about 28% says yes, 52% says no. So I'm going to go ahead and close the poll. So before we start getting into our annual mortgage review, I want to show you some of the best practices. One of them being number 10 is always add video, 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 video. It is your way, your platform for you to connect with your customers. So basically, with the annual mortgage review, you being a trusted advisor, when you set up that expectation in the front, Mr. and Mr. Borrower, with doing a transaction with me here at ABC Mortgage as your trusted advisor, I will be monitoring your mortgage throughout the duration of your loan on every anniversary of your first payment, let's just say. And by doing so, if there's any benefits to the rate that may benefit you, I would definitely touch bases with you. If there's any type of economic shift, like Brexit we have during the summertime, reaching out to your customer each and every time. Now, please don't let me set up the interpretation that every single time when you do an annual mortgage review, it will result into some type of transaction. That may not be the case. You have to make sure that, one, the value's there, your customer is in a great position. But what it does do, when you do an annual review, when you reach out to that customer, deepen that relationship, you build a relationship for life with that customer. And also, it may pan out into a transaction that you can offer some type of financial benefit. You also, if the customer is not eligible, or maybe you can show your customer how to reinvest into the principal to get out of mortgage debt quicker. There's a lot of scenarios. Also, maybe the customer may know of a family member or friend who's looking for a home. Then there calls a referral. But it's all about discipline. So you can see here, these are some of the best practices. Make sure you set up that funded loan. I will show you how to do that in your mortgage coach system. Make sure that you have any keynotes, rapport about the customer, what took place, what worked, what didn't work. But it's all about discipline. So if you set up that expectation with your customer, I'm going to close off this. If you set up that expectation with your customer, you have to make sure that you follow through. And by following through, it's all about discipline. So whether it's you or your great assistant, you need to make sure that you stay disciplined to make sure you follow through every single year with doing those annual mortgage reviews. Because ultimately, you as the lending professional, you should be an advocate for each and every one of your customers. And to accomplish this, you have to use and leverage Mortgage Coach because we provide you with the technology so you are successful with doing this. So I'm going to go ahead and close this. And now I want to show you how to build your annual mortgage review. So what you can do here from the website, you have the option to, under Member Services, you can log into Mortgage Coach here, or you can open up a blank browser, type in edge.mortgagecoach.com, and you can access the system that way as well. So what you'll need to do is enter your email and password. And I'll go ahead and enter my email and password here. And once the system properly authenticates you, you'll then be logged in to your dashboard, which is your database here. Now, again, I want to set and paint a picture for you for my customer. So let's just say my customer, I'm going to start with a first payment date of May 1st, 2013. Let's say 2014 wasn't a great year for my customer. Maybe the value wasn't there, couldn't support the value to do a refinance or take my customer out of mortgage insurance year one. Year two, maybe there was some financial distress with my customer, but being diligent and obedient, I still reached out to my customer, whether it resulted in a transaction or not. So we're in year two. We still didn't do anything, but we're deepening that relationship. Now it's 2016, year three. Now my customer is eligible. We have great, we have the equity is there for my customer. I want to give her a couple of scenarios. Never paint yourself in a picture just in case the value doesn't hold up, but always give your customer an ideal, maybe the best option, and then a backup. So that's what I want to do here. I want to show my customer in year three, we can do a refinance, lowering the interest rate, and refinancing her out of MI. So that is the actual scenario that I want to show you guys today. So to do that, remember, we need to set up our funded loan because this is a past customer. So we have this information in our CRM tool or maybe our database. So what I want to do is I want to go through new client here just to set this up so I can begin to do my annual mortgage review. So the first name, let's just say that my customer name is Taylor. And the last name, let's just say, is Smith. And just like you would do your regular scenarios here, you have to always complete the red highlighted information with a red asterisk. Now there is no co-borrower. I have all this information on my Final 1003 and my database. And the phone number. I call Taylor every single year, so I have a great phone number for Taylor. So I'm going to go ahead and put this information in the system. Referred by. If you want to loop in a referral source or maybe a realtor partner, maybe the realtor who helped purchase the home for Taylor, if you want to loop them in, you definitely can. Also cross-reference your referral source when you're making that video. You can add in their name and their email here. And then your friendly name. You always want to make sure you add a friendly name, which is your descriptive name, when you are completing your presentations. So I want to do an annual mortgage review, and I'm just going to do year three so I know. And then on that best practice, this is the area for clip notes. Now, these clip notes are just for you as a lending professional. These notes are not shown on the presentation at all for the customer. So if you want to put your rapport, what the customer liked, what they didn't like, what are their goals, their hobbies, whatever you can use here to connect you and help you stay honest as you are building your presentation. Do they want impounds? Whatever the case may be, what is the goal here? So now that we have all of our information here in this area, I want to save this information by arrowing to the right. Next is the goals. So here, this is if you were doing a new app, but we're not doing a new app. This is an existing client. So I'm going to go ahead and bypass these goals here. I want to move right on to assumptions. Now here in the assumptions area, I need to put in the property value. So the property value in my scenario, let's just say the value is $330,000. Maybe I did a BPO, maybe I have an appraisal, but I'm going to use 330. You can put the original appraised value here. It's not red or highlighted. It's not required, but the property value is required in this area here. So I'm going to advance forward. Now I need to enter in the current details of the current mortgage. So like I stated earlier, my first payment date, so you will need this from your CRM or your database to obtain when the first payment of that transaction took place. So mine was 5/01/2013. And then the original loan amount. It is not the property value today. The original loan amount was $260,000. Now the interest rate, the current interest rate today. The current interest rate that my customer has is 5.25. Now, please keep in mind when I am listing rates on this product and my new products that I'm going to build, keep in mind I have not pulled a rate sheet, even though I know within the economy and what's going on right now within the market, rates are soaring, but I have not pulled a rate sheet, but I'm going to use some factors here just to drive home the point. Now the term, I have to put the term in month format. So the current term is 360 months, 30 years. And here's my remaining balance. Now, if for some reason the remaining balance is different, maybe you have pulled a current payoff demand, or maybe you pulled a credit report and it's a little bit different, you can always override this number here. But let's just say for training purposes, we're spot on with the remaining balance. Now, in my best practices, we also mentioned that the use and always leverage the auto update balance. Now, to do that, all you have to do is check this box here. Now, what that means is, say this was year 1 or year 2, maybe year 4 and 5, and you can't do anything for the customer. You can check this box, auto update. And what that means is the system will automatically update where the customer should be with regarding the remaining balance should you open this file in the future. So a month from now, 2 months from now, 6 months, a year from now, it will auto update for you of where the customer should be that future dated time. Now the loan type. My current situation is a fix, but if your current situation was other than a fix, you would simply select the drop down that's appropriate. The system automatically calculates what my P&I payment is. So now I'm fine here. I have all the required information. I want to advance forward by arrowing to the right. Now this is the current monthly cost for the current mortgage. So my hazard insurance is $94.79. My property taxes is $338.54. And my customer is currently paying $130 for mortgage insurance. So now that I have the applicable information, I want to advance forward and arrow to the right. Now you'll be brought down to the affordability screen. Now the affordability screen, there's 2 parts within affordability. What can the customer afford and what would they like to spend? Now the affordability, there's no red indicators here, so this is definitely a screen you can bypass. But if you wanted to show a tax benefit for your customer, the benefit of owning a home, all you have to do is place the tax bracket percentage here. If for some reason you do not know what that percentage is, you can hit this option here. Will route you to a quick link, which is an income matrix, and you can find the tax bracket, and all you need is a couple of pieces of information. One, the filing status, filing year, and the annual gross income. So I'm going to go ahead and advance forward. And then what would the customer like to spend? Well, this is more geared to a purchase. And in my scenario, I want to do a refinance for my customer. So I'm going to bypass this screen as well. Now we're moving to our first product. So this is where we can now solidify what can we do for our customer. So I want to name my product. Whenever you're naming your product, make sure you stay within 12 characters or less. So let's go ahead and name this one. This is going to be a 30-year fix. 30-year fix. Now, is this a refinance? Yes or no? I'm going to select yes. And as you can see, the property value filtered over for me from assumptions. I have my equity. I have my base loan amount. And now I need to drop in the rate. So let's just say for this 30-year option, the rate is 4.625. The 30-year based in my product name, I have to put the months and the term in months. So I'm going to put 360 months. And then the loan type, it is a fix. Once I'm done, I'm going to advance forward. And now I'm going to pull in my closing costs details. So I'm going to select from closing cost details. If you have a fee sheet, you can add in your fees manually, but I highly suggest that you get those fee templates available to save some time. So I'm going to pull from my fee templates here and implement those fees right in that blank area and apply those to the loan. Now I have the option to add in my prepaid days of interest, but before I move on, I want to go back to my closing cost details and make sure that all the fees are checked underneath this column where it says add to loan. So that way when my customer is doing their refinance, it's zero cash to close. So you can either check one by one or make sure this box down here is checked to add all fees to the loan. Now here at this point, if there's any points associated to your loan parameters, you can add in your points. And here's where you can add in your prepaid days of interest. So add 15 days of prepaid interest and add that interest right to the loan so it's not called for cash to close. I want to advance forward now and enter in that monthly cost for my new product, that 30-year. So let's just say the hazard insurance is $94.79. I haven't updated evidence of insurance. Maybe my tax bill has already been updated. Taxes is $338.54. And I can see here to the right that the LTV is not causing for any type of MI. So I don't have to add any MI on my new product. But my customer wants impound, so I want to get some reserves, 2 months for hazard insurance, along with 4 months for the property taxes. When you're leveraging Mortgage Coach, you have the ability to add 4 products simultaneously. So it's the current mortgage is not counted. So it's 4 products against the current mortgage. But I want to build just 2 products for you. So to do that, all I have to do is add another product. But before I move this area here, I want to make sure, since I'm adding some reserves, I want to make sure that those costs are also added in the loan. So instead of arrowing to the right, I want to arrow to the left once. Go back into my closing cost details. Just give it a double glance to make sure that all those fees and costs are being added to the loan, making sure that box is checked before I move forward. So now I want to add another product by selecting add another product here at the bottom. Now I can add product 2. So this one I'm going to do a 25-year fix. And I'm going to follow the same steps. But to save me some time with my entry points, what I want to do is answer this question. Is this a refinance? Yes. I can enter in all the information, but I'm going to leverage from my copy from feature to save some time here. So I'm going to select copy from. I can copy from the current mortgage or that 30-year that I just created. So So I'm going to copy from the 30-year and do a little bit of editing here. So my property value is good. My equity position is great. The base loan amount is fine, but maybe the interest rate is a little bit different. So I'm going to update this interest rate to 4.5. And then the term, I'm saying this is a 25 years, so it does not match a term of 360. So I'm going to change that to 300 months and move forward by arrowing to the right. You can see here by copying from that 30-year product, my closing costs copied over nicely for me. If you had to do any edits, you would need to go in this area to make those changes. So let's advance forward. We can see our monthly costs also copied over nicely for us. This is where you can add product 3 and 4, but I just want to add 2 products here, so I'm going to advance forward. And now we're reaching the analysis summary. So you as a lending professional can determine your home in X region would appreciate at X factor. So right here it's currently showing at 3%, but maybe it's 4%. And then the short-term analysis is defaulted to 60 months. Maybe I want this to mimic the CD, closing disclosure, or the LE, the loan estimate. But if you wanted to make some adjustments here to go up or down, maybe 36 months, 48 months, you can definitely make those changes. And then based on the long-term analysis, it is defaulted to 15 years. But maybe there was a conversation that was had that your customer wants to sell within 10 years. So always make the adjustments applicable to your scenario. The monthly bench savings is currently defaulted at the highest cost, which is the current mortgage. But if you wanted to show a comparison to another product, you can definitely make those changes there. My short-term analysis is here based on my months. And then my long-term is based on the horizon that I selected, 10 years. I want my customer to see the total interest in MI that she's going to pay. But if I wanted to change to total net worth or principal paid, I can definitely change the radio dial here. So let's move forward. You're now at the contact information area. You can definitely bypass this. But if you want the address to be shown on your presentation, you have to add in an address here. And it will be shown on the actual presentation. So I'll just pop in an address here. As you can see, the only address that's shown is the property address, not the mailing address. But if you want to complete the mailing address, and it is the same for the property address, hence it's a refinance, you can just select this button, Copy from Property, saving you some time and entry points. So let's advance forward and select the presentation we want to see, which is a total cost analysis. We can see our 2 products here. If you did not want to see one of the 2, all you have to do is simply uncheck this box and it will be excluded. Then you have your payment notes. So always let your customer know what's going on with the payment. So I'm going to let my customer know taxes and insurance are included in the payment. Everywhere where there's 2 asterisks in front of the PD payment, principal, interest, tax, and insurance, the customer will see your tandem payment notes. So if you want to add more color, you definitely can in this area. Now here is your payment savings. You can see that graph as well with some additional sidebar text that you can add to. Here is the short-term savings. And here's the long-term savings with additional sidebar text. At this point, you want to make sure that you add a quote date. So anytime you're quoting rates, always add a quote date. You can now generate your link. So you can copy and paste your link here. Copy and paste it in an email, or you can hit share, hit email, and the dynamic link would then be embedded in the body of the email. And this is where you would select to add audio and video to your presentation using your browser. So if I hit add audio and video using the browser, you can see my final product then displays for me. And right down here is where you can start recording your message. So if you're using your desktop that has a built-in camera, or your laptop that has a built-in camera, or maybe an aftermarket webcam, this is where you would come to record using your desktop. But like I stated earlier, if you have those apps downloaded on your mobile device, whether it's an Android or a Google or an Android or an iPhone, we have an additional platform for you, which is adding video to or from your mobile device. So in the handout within the webinar, you will locate a handout where I've provided an MC playbook in there for you. And on page 35, it is a video checklist to make sure that your video is successful. So make sure that you educate your customer, give you some do's and some don'ts. Make sure that you are following this grid. It's not a flow. It's just a good guide to help you make sure that your video creation is successful. And then we have 7 easy steps. So you will log into the application, you will follow steps 2, 3, all the way down to 7, and make sure that your video creation is successful. And I wanted to make sure I provided that handout right there in the webinar for you. So here's our final presentation. And as you can see, I've done exactly what I stated to my customer with reaching out every single year for this annual mortgage review. The current mortgage that she has, she's paying 5.25 in a rate. By refinancing, I can bring her rate down. Even though rates are soaring, the customer can still elect a benefit by increasing her cash flow of $148 by reducing the rate down to 4.625. And again, that is starting and refinancing back up to 30 years. But if the customer doesn't want to start back and lose those valuable years, I also have a 25-year option for my customer, which taking this option and refinancing, she can still pay off her mortgage sooner than where she is today. And it increases her cash flow by 44%. So this is how you can leverage the annual mortgage review by providing some benefits to your customer. What can you do for them? 1, we can refinance out of mortgage insurance. 2, we can increase your cash flow. 3, we can also show you how to impact and elect with taking a benefit of a reduction in a rate. So if you are building really quickly within the webinar here, in the wizard, we went all the way from client all the way to presentation. We hovered over preview. We generated our link, added a video. But if you get stuck and you have questions, there is a help button here. You can select help. It routes you right over to our Mortgage Coach Support Center where we have resources, frequently asked questions, playlists, and scripts. But right here in this search engine, you can add in a keyword, phrase, or scenario, and everything that you're looking for will display for you as we have quick little video assets for you to leverage to revisit in case you have any questions. And as promised, I want to tell you, right next to member services, remember this is where you can download your getting started guide. But right next to member services is the calendar. And by selecting calendar, this is how you can connect with us and see our monthly event calendar of everything that we have to offer here. As being a member with Mortgage Coach, you can obtain additional training classes. So we always offer you an intro class, Intro to Mortgage Coach, every single Tuesday. Our CEO, Dave Savage, interviews top industry leaders. He's going to interview Steve Harney on Tuesday. You want to know more about mobile and how this can benefit you and leverage your business? Check out our Mobile Wednesdays. And on Thursdays, we always offer a platform for you for Q&A sessions. So if you have those tough scenarios, definitely bring those to our Q&A session as well. So I know I've provided a lot of detailed information to you. I want to go right back here to the actual final presentation and see if there's any additional questions that our team has not answered. And we have one for Janice. So where to find the actual best practices? So the best practices is a guide that we have created, but if you like, I can definitely email that to you. But don't forget to pick up our MC playbook where we have additional strategies in there for you as well. So right under member services is where you can select quick start guide. And there's one. Okay, so we do have the question being answered for Robert. Good job. I want to pause here and see if there's any additional questions that I can answer for you that my team has not already answered for you at this time. And remember, right in the webinar is where you can, right here in the webinar is where you can access and submit all of your questions. So the 5-year cost. So let's go talk about that. So in the final scenario here, I'm going to unclear. So the 5-year cost. So when you're looking at the final presentation, it talks about the property value, the loan amount, the interest rate, the APR, the payment, the monthly savings as demonstrated to the right, the first lien tip, how long, or not how long, but how long is it going to take to pay off the loan over time in a percentage, the 5-year cost. How we break down the 5-year cost, how it is the calculations with leveraging Mortgage Coach, that 5-year monthly savings. What we do is we take the interest and MI paid for all scenarios here across the board. We add in the closing costs and fees. We add those 2 line items here to determine the total cost. And then what we do is subtract the total cost from the highest cost loan product. So here the customer is paying more interest on her current loan versus a 30-year versus a 25-year. So once we do that subtraction, then we can determine and let the customer know what is that net savings from the highest cost. So this number subtracted from here, there's a net savings of over $5,300, and then so forth with the 30-year, there's a savings of $2,900 plus. So thank you so much. Great questions. Is there any additional questions that I can answer for you? Thank you, Janice. Okay. Well, thank you so much for all of your questions. We really do appreciate that here at Mortgage Coach. Again, there's a calendar for you to sign up for any additional questions that you may have with leveraging additional training if you have a training need with our monthly events here. Again, my name is Starlette Johnson. I'm one of the national trainers here at Mortgage Coach. I hope you guys have a great holiday weekend. It is almost close time to the holidays, so if I don't talk to you, happy holidays and happy New Year's to all of you. And thank you all for participating in our 2-week, 10 days to Rockstar status training. Have a great day, you guys, and have a Rockstar Friday. Take care. Bye-bye.